virus stimulus packages. This presentation is for small business. Some of them is for the employee, not only just the employer. Some of it is for the payroll or tax professional. So in doing this is kind of an overview coordinated effort. And why are we doing this? Because this is either credit for refunds to the small business. This is loans from SBA and or through the banks for getting money that you don't have to pay back. So if I'm the business owner, what I'm going to talk to you about in this summary is about other videos that I've done and kind of coordinating. First goal, whether through IRS or through the banking system, the employer is going to get paid to help either with closure or help with maintaining employees. But in order to do that, there's overlapping rules. So please stay with me, because in each one of these areas I've done a separate video on how to get the money, how to help survive a crisis. So what I want to do here on this board, if we can look down at the board, actually I'm going to do something here. I'm going to draw a little, this is not as an accountant a debit or credit. So on this side, I'm going to say IRS. On this side, I'm going to say bank, SBA. And under this, what I want to do, I'm going to put down what I would say is the employee retention credit. And then secondly, and it's the Family First Coronavirus Response Act. And then over here, it's the Payroll Protection Program. And then we're going to have the Economic Injury Disaster Loan. Again, 4 different programs. I've done detailed presentations in each one of these areas. But the big concern that when we get done with it is we get benefits, but most of those benefits are based on either payroll cost or qualified expense. And we can't double dip. We can't do one and the other. So over here, this is the title. I'm going to put under here effective dates. So for example, for the employee retention credit, it's going to go starting on 3/13 or after 3/12/2020 to 12/31/20. When I look at the Family First Act, it covers a period 4/1/20 to 12/31/20. Under the payroll protection, its time period is 2/15/20 to 6/30/20. And then whenever I look at the economic injury disaster loan, it's going to be 1/31/20 to 12/31/20. So you can see even there, the dates are different. So effective dates. Okay, so now we got our dates. So let's go back here. And what I want to do is I'm going to go down each one of these and see how we get the money, how we stay in business, how employees have rights even. Let's look for the reason for the benefit. Here, under the employee retention credit, the reason for this credit is whenever it's to retain employees. So we're trying to retain employees, but it only applies whenever you are fully or partially shut down because of the coronavirus. So I want to say full or partially shut down, or your gross receipts have dropped by more than 50%. So for that particular small business, what we're going to do is we're going to get a credit on employees. Now, so that's our benefit. And the credit equals 50% on up to $10,000 for the year. Or in effect, we're going to get 50% of 10, so the credit equals a max of $5,000 for the year. How do we get? Because we got to know how to get it, to look for it. How to receive is first, you're going to go to your payroll reports, your 941, 943, 944, and the CT-1. Now, if we don't get all of it there, then we're going to file the Form 7200. It's a brand new form. There's a video on it. It's not a required filing. You only file this Form 7200 whenever you don't get all the benefit of the credit on your regular payroll filing. So what happens is, what your limit is payroll qualified payroll. So before I go to the next one, let's just recap. It is an employee retention credit for the period from March 13th to the end of the year. It's to retain employees. The credit is based on employee payroll, but in order to qualify as an employer, you have to have been either fully or partially shut down because of a government action on coronavirus, or your gross receipts have dropped by more than 50%. You get the benefit of a credit of 50% of payroll paid up to a max for the year of $5,000. You get it based on your quarterly reports. If you're a quarterly, let's say, for example, your 941 you file, you don't receive the whole benefit, and I covered that in a different series. Then you file a Form 7200, and again, it's based on qualified payroll. Let's now go, I'm gonna draw a line right here. Now, let's go to the Family First Act. The Family First Coronavirus Response Act is what the initials stand for. And what we're going to do there, if we start back up here, let's look at our reason. Our reason is unable to work related to the coronavirus. In this case, this is what we call sick leave. So I'm going to put right here, unable to work because of the corona-19. So I'm going to put C19. In that case, it is paid family sick leave. So it's paid sick leave. Or it's a family, actually the technical term is families, and it's an extended families and medical leave. In that presentation, what I do is I go through, and just real quick summary, is that they expanded the paid sick leave. And that paid sick leave is up to 80 hours or 2 weeks because it's directly related to the coronavirus. And so with that family sick leave, then they also put in what they call the expanded family or medical leave. And there, what happens is that you can get an additional 10 weeks at 2/3 of your regular pay. I also go into what happens if the company shuts down. I do one for the employer. I do a presentation for the employee. I also do frequently asked questions. What I look at is to say, what are the questions I'm getting? And one of them is presented, again, there's one for employee, there's one for employer. The common questions I get asked, there's one for the employer, and there's one for the employee. The thing about it is that this is whenever there is coronavirus or the schools are closed because, or the babysitter's not available because of the coronavirus. And one of the big takeaways that I get out of this part of the act is that it's so important for the employer and employee to work together. There's some flexibility here. Actually, I get into the fact that the flexibility, you've got telework. You can actually have somebody that is working, telework, and then may qualify for this sick leave. And I go on how to do that. If there's no telework, then I go into how you can have intermittent sick leave and yet be employed in the same pay period. So there's a lot of flexibility here, but flexibility creates complications. So I recommend you go look at that. So then the next thing I want to go on down, what's our benefit? Again, what's our credit? Our credit is 100%. It's $1 for $1 of the sick leave. You know, I had a person call me and said, wow, Larry, this is going to be putting me out of business. This is a client of mine yesterday morning. And I said, no, please. And he goes, yeah. He said, I can't pay this. You know, they're at home, blah, blah, blah. I said, no, here's what's going to happen. You have to post the sick leave provisions. So if you're that employer, you're that tax or payroll professional, we need to be aware of the rules. It has to be obvious. But in it, if you understand how the law works and there's coordination between the employer and employee and the employer can work through this together, take care of family, and yet the government is going to reimburse 100% dollar for dollar what the rules are. And again, that's up to 2 weeks, 80 hours. That's directly related with the coronavirus, 100% of those 80 hours. If it's part of the extended, the additional 10 weeks, then the employee is going to get 2/3 pay, but the employer is going to get reimbursed. So let's go back to filling out our chart. How do we receive? I should probably put money. How do we get the money? How do we get reimbursed? Well, it's going to be very consistent. We're dealing on the IRS side, it's going to be the 941, 943, then the 940, and then again the CT1. If, just like over here under the employee retention credit, over here on the family first, what we're going to be able to do if we don't get all the credit, then we're going to file form 7200. So again, and again, I can't say enough about, let's coordinate between employers, employees to get through this crisis. But I also want to say, please, employer, go to your qualified tax, payroll professional, because this form here, 7200, hopefully is only around for the rest of this year. It pops up. So, and again, real quick, if let's say that after you file your 941, you have a credit of $1,000 that hasn't been reimbursed, you're going to file this in the quarter. You're going to file it in the quarter. I'll put quarter. And guess what? You're going to get the money back then. The limit, again, is payroll. The reason why I keep saying this limit's payroll is because you can have payroll qualifying in all four areas, but we can't, again, we cannot double deduct. So at this point in time, we've dealt with the IRS side. We've looked at the employee retention credit, where our revenues have gone down or were closed or partially closed because of the government actions. Here's how we get our money. And the next one, the Family First Act, is to help us take care of when families need to be at home. And I think, again, whenever we can get reimbursed 100%, I think the most important thing is to understand the rules. So at this point in time, I'm going to flip and go over on the other side here, and I'm going to look at the stimulus part for banks and SBAs. Normally I wouldn't go over here because I'm a practitioner. I'm over here. I'm a payroll person. I'm over here. But the employer is all the way across, plus when we get down here to our limit, we got payroll, and then what I'm going to have, and I should say that I say it, but I'm going to say qualified payroll. Over here, we're going to end up with qualified expenses, and we're going to end up with qualified expenses, which include qualified payroll. So qualified payroll, qualified payroll, qualified payroll, qualified payroll. You cannot double deduct it. Even as an employer, as a payroll tax professional, you're going to have to know all four sets of rules in order to in order to comply with the law. So let's go over here and let's look at the the Paycheck Protection Program. So there, what is our reason? We need money to cash flow. So here we're going to get a loan up to 2.5 times, and I'm going to put qualified payroll cost. And I put that in parentheses because I took that right out of the stimulus package, because the payroll cost under this program is payroll cost including certain qualified self-employment, which is very different than if I was over here on the IRS side. This is IRS code sections over here. This is banking and treasury over here. Payroll costs include, if you're a tax professional, if you're a payroll professional, don't assume that payroll costs means what you and I are normally think of. Now, if you get this loan as a small business or a business employer, then if you have an 8-week period, so this is the benefit. Again, the benefit, 8-week period. If we spend 100% on qualified expenses, we have to pay a loan of zero. What we don't spend is qualified in this 8-week period, and this starts the day of the loan origination. Then what happens is we have a loan. But remember, when we get these expenses paid here, this is the benefit. Remember, benefit. If we spend them here, we can't use them over here. If we spend them here, we can't use them over here. We can, again, I can't say enough times, you can't double dip. How do we get this? We go to the bank and SBA. Now I can tell you these rules or I should say the act passed so quickly that as we move forward, we're going to have more and more regulations. So, but we go to the bank. Many of you may be doing it as I speak, and you're going to end up the 2.5 times payroll is based on the definition of payroll cost, again expanded to what you and I think of payroll cost, and then we have to spend it on qualified expenses. Let's go and move to our last column because it kind of parallels our banking column under Paycheck Protection Program. And again, this is the economic injury disaster loan. And there's a whole bunch about the loan. The thing I want to put on this screen is the fact that we have an emergency grant. So it's called a grant. And actually, if you don't qualify for it, but you're a qualified business, but you don't qualify for the loan, the first $10,000 is a grant and you get to keep it, but you got to spend it, on qualified expense. Where do we go? SBA. So here you got to spend it. You go to SBA online and it's got to be on qualified expenses. Again, the reason why I put this in here, is the important thing is when we get to the bottom of this, we cannot double dip. So kind of the driving force behind me doing this in this kind of spreadsheet type format, I like one picture's worth 1,000 words. And when I step back and I look at this, I did this because I got so many calls from clients, from other instructors, from people that attend my classes. And I'm like, I can't answer all the phone calls. So I decided to do this. And this is an overview. It's like anything else. You still got to go in the weeds. So if you're an employer, if you're the tax or payroll professional, I hope this helps you, but we still have to go to the other seminars. Like I said, I got a video on the retention credit. I've got one on the Family First. I've got one that's on actually on the Family First. I have one for the employer, the employee. I have Q&As of questions I've been asked. I talk about, can an employee qualify for the sick pay and do unemployment? The answer is no. I tell you in there what's the rights of the employer if their company shut down. I say what's the rights of the employee if the company shut down, if it's before April 1st or after. This is an overview, but I've gone to much more in-depth in those presentations than I've done one that's dealing over in the banking side on what is the Paycheck Protection Program and where to go to. And then finally going online to SBA. Takeaway, I hope this helps. I hope the other videos help, but more importantly, let's be safe. Let's all stay healthy. Employers, employees, banks, tax professionals, payroll professionals. Let's work through this. Let's comply with it. And my part is to help to educate you, to do it right, to be an advocate for you, whoever you may be, that we do it right and we get every dollar of benefit, whether it's for me, the practitioner, for my clients, for me, the practitioner, for my employees, for me, the practitioner, and wanting to do it professionally correct. And I've got to say, please, as you can see from this mind maze here, very complex. And I recommend highly that you go to irs.gov and find a qualified tax payroll professional to help you through this maze. Also, I recommend you go to your local banker and get advice. And if they are not doing these loans, our local banks, I've been working with them. If they don't, they refer you to a bank that does. So again, tough times. I hope this helps. And stay tuned. I will be updating videos. And if you have additional questions, please forward your additional questions. Thank you.